Hi there, guys. Welcome to Midweek with Indiacharts. We're joined here with Jay Vora and I am Muskan Kapoor. We're doing this after quite some time because we'd gone on a vacation. So we're back at it. A lot have happened in the market, Jay. So we're completely
Yes,
ready to ask you a few questions. Let me just get
sure.
started. So Fed Bullard and Fed Williams, they had recently commented, and the comment was sounding a little hawkish, and that resulted
Right,
in around 2% correction in a few US indices like the
right,
Nasdaq 100 and the Russell 2000. What were
correct.
the key takeaways that you took from their comment?
So I think they have told nothing new apart from, what we have been highlighting. Especially, I just want to, I think, put a disclaimer over here. I think Fed Bullard is actually the most hawkish one amongst the all. Matlab, while the other Fed ka language might be a little toned down, but this guy is very explicit in telling that, we have to raise rates, blah, 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 and all. So, anyways, the comments which I read, I heard in the news articles and all. So what it essentially meant was the same thing, that the inflation hasn't, is too far away from, our comfort zone basically. So it needs to come down, and to tackle that, we have to raise the interest rate. And he is of the view. So he mentioned that, he's of the view that 5 to 7 is an ideal Fed fund rate, basically, where the rates needs to go, and that is where they can control it. Then he said that at least we need to reach towards that level, if not more, then at least 5 is something where we need to reach out. So right now it is at 3.75 to 4. So there is still a bit of a time left before the Fed stops hiking rate. But that was it. And Fed Williams, he said that he did not comment much, honestly. But it was just that he said that you can expect the unemployment to inch higher to 4.5 to 5 levels, which is right now at 3.7. So basically he's telling that the labor market can weaken in the in the coming months. And there you can see some spike, but overall, the whole broader idea was that they would stick to their plan.
Yeah.
And basically, Bullard also went on to say that market is underestimating, that we might not do the aggressive rate hikes and all of that. But he said that we are sticking to our part. That is what the goal is, to bring the inflation down. So till they don't see the inflation coming down, they might continue to do the rate hikes.
Makes sense. It's eventually depends on what our end goal is. And yeah, if their end goal is clear, they will make decisions accordingly. Yes.
Correct.
Anyway, I will move to the next question. It's related to charts. So I want to know, how are the charts of the key US indices shaping up? And
Okay.
is the worst over yet? Because our previous wrap ups, we were talking about how a lot of US indices are weakening and are not
Correct.
performing as well as they used to. So, have they started covering up? Is it getting better?
Okay, sure. So I'll just share the screen, and yeah. Uh, so if you see the Dow Jones index, so this is the only one index, which has actually risen higher sharply, and it has broken all the resistance level.
Yeah.
So even this trend line is broken. Okay, it has come back to its previous high, but I think that is a little above 61.8% of the entire fall.
Correct.
Okay. So this is basically 66% retracement of the entire fall. So in terms of deeper retracement, the Dow Jones index has done that. Okay. But when you see the other indexes like S&P 500 and all, they are still below their key weekly averages. So if you see the S&P 500, it has been cooling off after testing this blue line, which is the 40-week average.
Yes.
So you can see that in the previous week. So basically, when this Fed statements came out, market reacted a bit on the downside. So if you see on the lower time frame, basically this was the day when they cooled off. After the comments. So yes, if we see a negative weekly close, there can be a potential reversal. But on the daily chart, we would like to see this trend line breaking and the average is getting breached on the downside to confirm that this pullback is over. Okay. Or else until then, what can possibly happen is that we might, see some sort of sideways consolidation or distribution before it falls. But yes, essentially the key is that this trend line should not be breached on the upside decisively, and we should get these confirmation on the lower time frame, basically the break of the trend line and the break of the daily averages.
Correct.
Now, if you see the Nasdaq index, this is the Nasdaq 100 index. So that is the weakest among the all. So it has not even crossed the 20-week moving average. And it is said that, when the trends are strong, the 20-week averages does not get breached. Okay. There is a lot of news in the stock, that is Credit Suisse. So I'll just give you that example because that stock is in a strong bear grip. Okay. So yeah. So see, in this, you can see that when the down move started, it is not even breaching the 20-week average in this case. Okay. 20 of any time frame, when that levels is not getting breached on the downside or on the upside, we say that the trend is strong. Okay. So in this case, in the medium term, the bearish trend is very strong and the 20-week is not getting breached. So something similar is possibly happening in the Nasdaq 100 index as well. Okay. But the only thing is that, again, we need confirmation. So, we would want to see that these averages get breached. Ultimately, this trend line getting breached. We would want to see all of that to confirm that the next leg of the down move has started. Okay. So this was Nasdaq. Then other one you see is the US small cap 2000. That is the Russell index.
Yeah.
So if you see the Russell index, almost similar setup, the channel is there. It is almost at this channel level. Okay. It needs to break that and the 40-day exponential average. That is where, we might think of, thinking that this entire pullback is complete. I mean, though, structure wise, it looks complete because if you see the weekly chart, again, similar pattern, it has pulled back to the 40-week. It has given a negative close and, the setup is all there basically to correct. Now it is just that the price action needs to confirm the same. Okay, in that case, what might happen is that the equality level of the previous move, that might kick in once the breakdown occurs. So over there also the targets can be much lower. But whether it happens or not, that needs to be seen and the price action needs to confirm that. Now, similar setup is of DJT as well. Not a similar setup, but even there the setup looks bearish because you can see that it is trading in a downward sloping channel. This time it has again reached back to the upper end of the downward sloping channel and now it is finding some resistance. So if this level is not breached, then you can expect the Dow Jones Transportation to start its next leg on the downside. But again, you would need confirmation on the lower time frame. So what right now I'm telling you is that on the higher time frame, they are hitting those resistance level. Okay. But on the lower time frame, you need confirmations
to validate
that, that the medium term reversal, which the chart is showing, is actually true. And, we might start falling because all this while what is happening is that they are coming to those levels and they are, just turning sideways. When they are turning sideways, there is always a risk that they, break out on the upside and, they extend their move. But, if you see the Elliott wave structure and you see the positioning, it does look like that, at the top, something major could be getting over. But, like I said, price action needs to be, confirming the same. So, yes, these were the, key indices which I tracked very closely. And this is how the setup is.
Correct. Makes sense. While we're talking about indices, I will move to my final question, which is my favorite thing to discuss because Nifty is this one aspect that is breaking highs. So I'll just move right it. So the FIIs long position is getting extreme. How do you personally see things playing out in the Nifty index in short term and also that Nifty index has now surpassed its all-time high. Do you
Right.
think next leg up move has started? Is it still the bear market? What is up with Nifty?
Sure. So see, I have this positioning of the FIIs. Okay,
Correct.
so it basically tells you whether the FIIs are long or short. So this is the zero line. Okay, this means that the FIIs net long and short is at equal level, and that is why it is zero.
Correct.
So right now what we are seeing is that the FIIs net long position has exceeded 90,000. Now remember, this data is of yesterday.
Yeah.
Okay, today also market rallied, so they might have added some more long position. So if you see post COVID, okay, if you see post COVID, this is the level. This is the level basically where the FIIs long position have reached extreme, and then after it has started to cool off.
Yeah.
Now, when we were in a bull market, okay, so say over here when it peaked, the market kept rallying higher. Okay, you saw a bit of a trimming of long positions, but they were still long, and the markets kept on rallying. But when you see after the October top occurred, okay, almost each of the highs have led to a deeper correction.
Correct.
Okay, if you see over here, the FI's positioning peaked out, and few days after that the Nifty fell. Okay, if you see over here, the same thing happened. In fact, at this point, exactly when the top occurred, the Nifty top also occurred. Now this time around, I mean over here as well, the FI did reach, and a bit of an extreme, because over here what was happening was that around 50,000 contract only the FI's long position were topping out. Okay, but after breaking this level, it has gone to the 90,000 level. So at 90,000 level now it is actually reaching an extreme. Okay, so over here, when does it turn around? I honestly, don't know, because right now the price action is not confirming, because this, to be very honest, this overbought reading had occurred on this candle. Okay, on this one, the smaller one. So that is where almost the FI's positioning had reached 90,000.
Got it.
But right now the market has kept rallying. In fact, today's candle is not updated. But if you see today also the market rallied, and yeah, so I think this position might be surpassed, above the previous high. Now, see, this readings won't work if we are in a bull market.
Yeah.
Okay, like it happened over here. Okay, now the only question is, and in fact over here also, see, when it peaked, you saw a sideways movement over here.
Yes.
Right? At every peak, you would see that there was some sort of sideways movement, and then it fell. Then either they started rally or they actually fell only. And, so we are reaching to that point. So the question then is that, will Nifty just do some bit of a time pass and this position cools off, and then we see again a next leg higher, or what?
Yeah.
That we need to see. But in the past few months, we have managed to catch the top and the bottom so far accurately because of the FII positioning. So if you see over here also, we had highlighted that it is reaching an extreme. Okay, and over here this three-wave move was getting completed. Yeah. And once see, this was the weekly chart. So if I zoom in here, so this was the three-wave rise which got completed, and once it fell and it broke the low and the FI's positioning also peaked, we did highlight that there is a risk of a downside. In fact, when it came over here, okay, we had also mentioned that now the FI's positioning is reaching an extreme, which means now this time around they are very much short. True. So a scope of a short covering rally is possible, when this is done. So over here, if you see, A equal to C was something that we were expecting, but ultimately wave C truncated and it did only 61.8% of wave A. And the moment we got a green close, we know, we sort of, highlighted to the subscribers that this pattern could be getting over and we might get a deeper pullback. Now, at this point of time, the expectation was that we might only see a pullback till here, okay, till this trend line, which was around 17,700. So over here, Nifty consolidated and all, and ultimately it gave a correction. But at this point of time, when the Nifty index corrected, if you see on the daily time frame, the FI short position had again come to an extreme level. Okay, it was, you can see it was over here. At this point of time, when the FI's positioning was extreme, so this low was over here. Then once again, when the FI's positioning reached the extreme, the low was somewhere over here. So that is where, we had even done a space saying that a pullback is a possibility. And then, the most bullish case we had was something like this, which Rohit sir had put out. So this was a wild guess. So obviously we were just expecting a retracement of this entire fall. Okay, this fall. But this was a wild case that what if, it is forming some kind of distribution pattern or something like that. And that is where we had thought of this possibility. So actually everything is overshot. But now the whole setup and our models are suggesting that, we are reaching an extreme. So from here, a pullback is a possibility, but at what point the pullback occurs is something when we fine tune on the lower time frame. So say if we go on an hourly chart, so this is not usually what we love to do, but if you see over here, the 20-day is not getting breached, the 40-hour is not getting breached. So in this entire rally, there were only two occasions. One was basically this point. And the other one was this point, okay, where the 40-hour was broken, or else you would see there was a smooth ride. So all this while our trailing level was the 40-hour exponential average, and since that is not getting breached, so there is still not a decisive sell signal. So if you ask me, will you go long over here? Then probably no. Will you short over here? Not yet. The signals are not there yet. So if you see the momentum cycle, which is the RMI, which is our proprietary momentum indicator. So over here as well, if you see, now look how we look at this indicator is that, wait, I'll show it on the meta stock. I think that would be more convenient. So I'll choose a white background. So hopefully people can see it. So see how we look at it in a sideways or a corrective market is that we will look to go cycle by cycle. Okay. This entire move was one cycle. Okay. This pullback was one cycle. Okay. This fall was one cycle. You can see from year to year. Then again, this pullback was one cycle. So the moment, what happens is that, see, this is the zero line. Okay. The momentum cycle will keep doing this like this. Okay. So this entire would probably be one cycle wherein you go up and you see a pullback of that move. Okay. Then again, you go up, you see a pullback of that move. So that is how these, we try to play with the help of the momentum cycle. So when we look at the momentum cycle now, so what is happening is that this entire rally has occurred and the momentum cycle has not come back to the zero line. Okay, which means that this entire move is one full leg. So whenever this leg is over, you might end up seeing a pullback. Now the pullback will be only till the 40, or will it see a retracement of this entire move, or will it see a a bigger fall, is something we will only get to know once the fall occurs. Okay, but all the FIIs are this RMI indicator, it is giving you a warning sign. Okay, there is a negative divergence which is visible wherein the prices are making higher highs, but the indicator is making a lower highs. So this is already, indicating that there is a negative divergence.
Correct.
And then apart from this, the FII positioning is telling us that it is reaching an extreme, but it is only the price action at this point of time, which is not confirming. So that is what we'll wait for the confirmation. So ideally, like I mentioned, the 40-hour average, okay, which is, but I'll clear all the drawings. So yeah, so the 40-hour average, which I showed you in this chart, that becomes the key, and that becomes basically the trailing level. Okay, these are dynamic level, it will change every hour. So if that is broken, that will be the first warning that this entire rise, which we saw from 16,900, okay, that is possibly getting over. Then we will go level by level. If the 40-hour breaks, we will look out for the 20-day. If 20-day breaks, we'll look out for the 40-day, and we'll look out for the whole cycle to complete. Okay. So this is how the short-term setup is. Now, I know, it is hard for people to digest that this can also possibly be a bear market rally. Now I'll explain you how. Okay. Now see, if you see a 5-wave rise. Okay. After that, when you see the correction, okay, this might possibly be wave A. Okay. I'm just giving you an example. So just don't literally try to relate that with Nifty. Okay. What can happen is that after wave A has occurred, the move from the low of wave A is very crucial. Okay. If we start seeing a clean 5-wave rise, that means that this might not be wave A, but instead wave 1 is complete, wave 2 is complete. Now a bigger wave 3 is starting. Okay. But when you don't see a clean move, you see something like this, or basically this move is corrective. Okay, this move is corrective and overlapping, and you can't find impulse move, within that pullback. Then you start anticipating that this might just be a counter trend move.
Got it.
Now, in a counter trend move, ideally you would want the counter trend move to end around 61.8%. Okay, around the 61.8% mark, you would want the counter trend move to complete.
Correct.
But it has not happened this time around. Okay. So there is a pattern called as expanded flat in A-late wave, okay, in which there is a chance that wave B can go above the high of the impulse move. Okay. But to an extent which is 138.2%. Okay. If it exceeds above that, then it might not be an expanded flat case. Okay. So this time around, what has happened is that the Nifty has just surpassed the high. So, that is why earlier as well, many people were asking at what level you would turn bullish and all of that. So our answer was the same, that, we want the macro thing to get sorted out, because, right now the Fed's the Fed speech is still hawkish. They are still of the view that they'll continue to raise rates. So the macro environment right now is not good. Okay. And other than that, this is a possibility which we highlighted. Now, again, please understand that if this is wave B and this is an expanded correction, wave C can occur, which could be very sharp. Okay. Now, I'm not telling you that this can happen, but these are the potential risks that we need to keep in our mind. Okay. So this is what we have been trying to, highlight in the past few days, that, in past few weeks, is that this move which has occurred from the low of 15,500, okay, basically this move, it looks a little lethargic, and it looks corrective, because if you see over here, this is 3-wave, this is 3-wave, over here you had seen a 5-wave. Okay. So basically this was 3-wave, this was 3-wave, and in fact, if you go down and drill if you go down and if you check the hourly chart, you can't really find an impulse move. And that is what is keeping us in doubt. Okay. And when we know that there is a potential risk, we need to be aware. Okay. Now, people would say कि अरे ऐसा थोड़ी, मतलब market ऊपर है तो ऊपर ही जाना चाहिए. and you should be bullish. But if you see Dow Jones, you know, it had beautifully followed this pattern. So what had happened was, everyone knows that Indian market saw a big bull run between 2004 to 2008. But if you see in Dow Jones index, it barely moved above the previous high. And if you see in terms of retracement, it was a little below 161.8. So it was basically it was a little above 138.2 and below 161.8. Okay, you can see over here. See, this is the 138.2 level. So it marginally surpassed above that. Now it says that whenever wave C occurs in an expanded flat, wave C can be 161.8% of wave A.
Correct.
Okay. So if you see the ratio as well, if I take it exactly at the high, then you can see that, you know, Dow Jones exactly did 161.8%. You know, people would have thought that if someone would have been highlighting this pattern, they would have looked like a fool at that point of time. But ultimately it played out. And you know, one thing I want to, you know, let people know that there is a inverted yield curve that has happened in 2 and 10 year, which we had highlighted in our presentation, you know, couple of weeks back, I think. So, you know, in that backdrop, you cannot ignore a deeper correction, okay? Because it has a history of 5 out of 5 times, you know, it has worked. So you know, this time around the yields have inverted, and you know, every time people want to believe that this time it is different, but ultimately I think, you know, that is the biggest risk I see in the market right now. And what will happen, why will it correct, maybe only time will tell. But when we are trying to, you know, correlate all the data, it is not really looking good. And given that, you know, Dow Jones has not, I mean, Nifty has surpassed the high, okay, but the Dow Jones index has not surpassed the high, has led to a bigger intermarket divergence. An intermarket divergence on a very bigger scale. Now something is wrong, you know, either Dow Jones is wrong or Indian market is wrong. But when this sort of things occur, you know, intermarket divergence, yield curve inverting, and now you're started to see that in the short term, the FIIs positioning have turned extreme, and typically we have, you know, seen some sort of correction from those levels. So these are all signs that, you know,
not really
there
very good news.
Corrections. There could be a correction sometime, you know, maybe in next few days. When does it happen? We need the price confirmation to tell us. But, you know, these are all the risks that are prevailing at this point of time. So basically, you know, all we would want to see is that the Nifty cycle getting completed. Okay. After this, supposingly if Nifty turns around, then we would again, you know, start thinking that whether the next up move is starting or not. But as I said, you know, we would right now want to focus only cycles, and we will try to play cycle to cycle, because right now we are in doubt. Okay, there is no question about that. We are in doubt, and we do see a lot of risks that are there in the market. So that is how our approach is. And yes, you know, this can be a bear market rally if this is an expanded flat that is playing out. Now, when does it prove right? That only time will tell. But, you know, these are the potential risks which people need to be aware of.
Correct. Thank you so much for this session. We learned a lot. We learned how to take care of, say, our portfolio at this time, and how to be aware of the risks that might be coming ahead of us before we move to a market that we cannot come out of easily. So yeah, thank you so much. This was very helpful. We will see everybody next week. Thank you.